Hello and welcome back to the next video of the FX Evolution trading course. Today I'll be discussing one of the most fundamental and important technical analysis tools, and that is support and resistance. Let's begin by how we define a support level. We can see here on this line chart the price has come down to a certain level and then rebounded off that level several times over. At some point, we can draw this as a support level because price has not been able to break to a new low. I generally like to define a support level by the second touch. So that means that this is the first touch and this is the second touch. So as price moves back up, I will draw this line. As technical analysis traders, we need to be able to recognize patterns. And because we now know that this is a support level, we know that if price would come back down to this zone, we could potentially buy it with the idea of profiting off an increase in price after. Let's now define a resistance level. So here we have a line chart again, and we can see the price has decreased, increased, come back down again, increased to the same point, and been unable to break it 3 times over. This has now become a resistance level or a psychological level in the market where price is unable to break to a new high currently. Again, because we're technical analysis traders, we could potentially look at selling at this level with the idea of profiting off the market decreasing in value over the next few days or hours. So let's take a look at an example of support within the Forex market. Here we have the Australian dollar Japanese yen daily chart within the MetaTrader 4 platform. We can see how price has interacted with the A, B, C, and D labels on our chart, and we've been able to clearly define a support level. We can also see the price has made a high, come down and hit this price again, and if we bought at B, C, and D and took profit at a certain point, we would have been profitable each time. Of course, if we held at D, it would have then gone on to continue with the trend. Here's an example of resistance within the Forex market on an Australian US dollar daily chart. I think it's really important to note that support and resistance will work on any time frame that you're looking at. So whether you're looking at a daily chart, an hourly chart, or even a 1-minute chart, support and resistance can be used to formulate a trading strategy. Here we have the zones A, B, C, D, and E, and we can see how over the years price has actually hit this level and then been sold off. So at some point, being B for me, and when it's come back down, I would have drawn my resistance level, and then at C, D, and E, I would have considered selling this particular currency down. We can see how profitable that would have been for us, and obviously this makes up a basis of a very, very good trading strategy. So how do we define the strength of our support and resistance levels? There's quite a few factors that may affect the strength of the support resistance level. These are, for a few, the more times a level has been respected, generally the stronger it is. A recent level will also have a greater significance over an older level. So to give you an example of that, if we're trading a 1-hour chart and looking at a 1-year-old support or resistance level, it may not be as strong as a 1-week-old support and resistance level. We can also see that levels are formed at psychological numbers. I think the easiest way to understand this is probably to think about a stock. When a stock reaches something like $100, generally, for the first time, generally it will struggle to get past that straight away. This is because $100 is a very psychological number for us as humans, and we like to take round numbers as profit. So many people will be taking profit at that $100, and therefore that will mean that price decreases, at least temporarily. We can also see sometimes a level that is an extreme high or low can become a support and resistance level. And this is because they're outlier levels, and not always do they get hit. So therefore they can be very big psychologically for us as traders. Let's look at the term role reversal and see how that works with resistance and support. So role reversal is really defined as resistance becoming support. And what that means is in this example of a line chart, we can see that price has interacted with this zone and become resistance and then eventually broken through. When price breaks to a new high, it's good for us as traders to think that when price is going to come back down to hit this previous resistance level, that it could be a level where there's going to be buyers looking at buying in. It creates a psychological level and therefore it creates a support level. So when resistance is broken for the first time and it comes back down, we can see that buyers have come in and then buyers have come in again, eventually with price making a new high. This works in bullish markets and also bearish markets. So let's take a look at role reversal from support to resistance. Price has made a low, it's then found support, and eventually broken through. When price goes back to what was previously our support level, it finds resistance, and us as sellers and technical analysis traders will come in and begin selling down this particular currency or stock. Here's a real life example of role reversal on the Euro US dollar 4-hour chart. You can see that price was going up, it reached a point, this point therefore became resistance, and eventually price was able to break through and make a new high. When it came back down to what was previously our resistance level though, people began buying, and this is because of the technique of role reversal. It's a psychological level where price was not able to break a new high, and price has now come back down and been unable to break through because us as buyers are looking to purchase into this and take it to a new high. So it's come back here, 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 and eventually made a new high. So this would have been a very good and profitable trade. Now this is not one that you see every day, but what is a dynamic support and resistance level? If we were looking at price steadily making a bunch of new highs and then coming down, we'd be able to potentially draw a trend line, and this is what's known as a dynamic support line. So price is in a steady increase, but you can see that every single time it decreases, it comes to around the same vertical line. This forms a trend line, and we can use this as dynamic support. So let's take a look at a Euro US dollar daily chart. Here we have the chart taken from the MetaTrader 4 platform again, and we can see that price is steadily increasing, and when it does decrease, it comes into our dynamic support line. And we draw this similarly to our other support lines. At the second or third touch, we'd be looking at this and considering buying each time it came down to this zone. Eventually price is going to break through, and you can see when it broke through, it continued with that break. So once it gets violated, or it means that it actually breaks through, we will not look at this particular line anymore from a support level. So the same technique can be used in bearish markets or downward markets, and that forms dynamic resistance. You can see the price is steadily decreasing, but every time it increases, it comes back to the same trend line as dynamic resistance. Again, if we have in a real life example, Australian US dollar daily, we can see how price is interacting with this zone until it eventually breaks through here and makes a new high. If we'd sold here and here, even if we'd sold here again, we should have been very profitable with this trading strategy. This concludes the video for today, and we'll see you in the next video.